Inflation has quickened to its highest level in over a year. In October, CPI increased to 3.6% year-on-year from 3.4% previously, driven by housing and utility costs along with food and non-alcoholic beverages. Food inflation, however, eased from 4.5% to 3.9% during the period. Last week, Finance Minister Enoch Godongwana announced a new 3% inflation target for the central bank. Policymakers hope that the move will help anchor inflation expectations and create room for lower interest rates. Tomorrow, Reserve Bank Governor Lesetja Kganyago delivers the MPC's last interest rate decision for this year. Retail sales increased by 3.1% year-on-year in September after rising by a revised 2.2% in August. General dealers and the textile, clothing and footwear sectors drove the uptick, supported by lower interest rates and subdued inflation, boosting consumer spend. On a month-on-month basis, retail sales are unchanged at 1.6%. Kevin Lings, chief economist at Stanlib, notes that growth in retail spending appears to have lost some momentum over August and September, but highlights that there usually is some holding back on retail activity ahead of Black Friday. RFG has reported lower annual earnings. The food producer's headline earnings per share fell by 10.3% during the period. This as slower global demand and U.S. tariff uncertainty weighed on the food producer's international division. International revenue fell by nearly 8%, while the regional segment increased revenue by 4.1% in a constrained consumer spending environment. The company also suffered an impairment loss of 104 million rand related to the underperformance of its meat products operation. This, along with the weaker performance of the international segment, made the group, which is set to be acquired by Premier in a share swap transaction, miss its medium-term targets. A final dividend of 70 cents per share has been declared, bringing the total dividend for the year to 99.6 cents, reflecting a reduction of 10.4%. Southern Sun has delivered a resilient first-half performance. During the period, the hotel group recorded its highest occupancy rate since the 2010 FIFA World Cup. Group-wide occupancy increased to 73.3% in October, boosting revenue by 18%. The recovery comes after a more subdued 6 months to end September, where Southern Sun posted a 5% increase in income to just over 3 billion rand. Driven almost entirely by its South African division, which grew income by 8% during the period. Now, this domestic strength helped offset a steep 29% drop in offshore revenue caused by the temporary closure of the Paradise Sun in the Seychelles. Overall, basic headline earnings per share rose by only 2%. But the performance sets the group up for a stronger second half, boosted by the peak summertime trading season and events such as the G20 summit. Merafe Resources says retrenchments at its ferrochrome operations could begin within weeks. That's after months of consultations have failed to deliver solutions to the severe challenges facing the industry. The company says the Glencore Merafe Chrome venture has held extensive talks with government, unions and employees, but no viable interventions have materialized, especially around securing a competitive electricity tariff. If no immediate support is provided, Merafe will place its Wonderkop and Boschek smelters on care and maintenance, leaving only the Lion smelter operating. The company says it will continue engaging all stakeholders as the process unfolds. Momentum has had a good start to its 2026 financial year. That's as the Financial Services Group's positive earnings trajectory established during its annual period spilled over into next year. Normalized headline earnings for the period came in at 1.7 billion rand in the first quarter, even though the value of new business fell by 26%. Looking further ahead, the group says its financial ambitions for 2027 of normalized headline earnings of 7 billion rand, return on equity of 20%, and value of new business margins of 1 to 2% are achievable. Life Healthcare is guiding for stronger underlying earnings this year, and that's despite the complicated impact of major asset disposals and a large fair value adjustment. The hospital group says normalized earnings per share, which strip out one-off items, are expected to rise between 7 and 12% to as much as 102 cents. But headline and basic earnings will be heavily affected by the sale of its Life Molecular Imaging business and a nearly 3 billion rand adjustment to a liability owed to Piramal Enterprises. And talks on how countries should adapt to the growing impacts of climate change remain unresolved at the COP30 summit in Belém, Brazil. At the center of the deadlock is disagreement of how adaptation progress should be measured and whether the proposed framework places an unfair burden on developing nations. A coalition of African and other developing countries is now calling for a delay in adopting the current set of adaptation indicators. They argue that the metrics fail to place any new accountability, obligations, or consequences on developed countries, while potentially increasing reporting demands on those least responsible for global emissions. South African lawmakers attending the summit say the transition to clean and reliable energy is urgent and unavoidable, but must be fairly balanced. They insist developed countries should contribute meaningfully to funding the transition without imposing economic harm or deepening existing inequalities.
You want us to implement all these changes, but what are you prepared to offer us in return? Because we will be impacted. We must cut down on coal-powered stations and to adopt alternative technologies is going to cost money. And every technology that you acquire costs lots of money. So what are you going to do to help us? I don't think Africa is being stubborn, but about transitioning. It's just that we can't transition and land our economies and our people into a worse state because of the transition. That's an unjust transition.